Hello, everyone. How's everyone doing today? Starting off with a look at Euro Pound. Talked about it reaching targets above 87, and the 200-day is containing it. I was shorting it up at this 87.40 level. I think it's going to pull back to, Steve was talking something about 85 and a half, 85. I think you have to buy this pullback because the next wave could take us up to 91. If you're a dollar bear, this is a good sign, even though we're getting a pullback in euro as well. Okay, from I think an important trend line that Blake showed yesterday. Anyway, I'm staying focused on euro pound. We'll be looking to buy pullbacks. This was, call it about a 450 pip move here. So, to look for 85 would be normal, and the next move could be 700 pips. That could take us all the way back towards this 91 level, 90, 91. Actually think that before it's all over with the dollar, we'll be taking out these 93 highs. That's my view. We had a nice pop in the metals yesterday, but again, silver underperforming gold. Actually, gold looks like it has a chance for new highs here. Wouldn't take much for us to get new highs. Whereas if we get new highs in gold and silver rallies in sympathy, the 1780 level is going to be a sell zone for me. Hello, Inger. Sinatra, Shahab, how are you? Looking at S&Ps, I want to tip my hat to my partner, Steve Volge, who yesterday live on Face said he would view any interest rate cut by the Fed as a shorting opportunity. Here was the Fed cut of 50 basis points. One of the best day trades, knowing Steve probably position traded it or took part of it off. A couple of things I could see the potential if we're going to hold here for this to be maybe A, B, C up towards 3,200. From here, this would actually take it up to, 3250. Back under these lows today, we have problems. Yen's trying to bottom here. Have a decent little reversal day off a 3 drive. There you go. 1, 2, 3. I'm not convinced. Even though you're going to see, we were talking about interest rates and the bonds yesterday, and someone was talking about a bottom. Thought it was premature, and it was premature with the interest rate cut. We got all the way down to 90. We are diverging here. So it is a possibility that we're going to have a nice little pop in yields from here. Same thing happened in TLT. Huge up day, huge spike, but still closed higher. If the yen isn't bottoming here, and I still think there's a chance it isn't, just like the yen could fail from these levels one more time. On a shorter term, he had a 3 drive, but on a 4-hour, it looks like a 1. Just count this whole thing as a 1, and then count this as 2. And one more drive, and this is what I'm looking for, is a push down towards this 106.12 level. So that would most likely entail that we failed from here at this 3080 level, which again, the throwover line was respected on this candle. Got through it on the Fed cut, but couldn't close above it. So 3100, 3090, still a pretty good resistance level. We'd have to close over it to get the next scenario for 3200 or better. And I think that's about all I'm going to cover here for now. Let's see what else. Was there anything I wanted to talk about? Could get a recovery in the US dollar back to about 98.40. That's where I think would be a natural place. And by then probably be looking at euro pound once again. And that's it. I think we have coverage on that. Would love to see 1780 silver to get short. I mean, you had a $2.50 break. If we have 2.5 from here, it's going to give you 1530 if it's a quality. And if it's 1.618, a short from up here could take us all the way down to $14 silver. So looking for this, would love to see one more high in gold for a third drive. I know some people are talking 1800. I think a guy from JP Morgan was talking that if gold does make a new high for the first time, even though it didn't confirm, maybe it's going to stay under 70 up here. So we'll see what happens. I want to recommend that people invest in themselves by at least trying us for 10 days and being able to have all this research at your fingertips. Okay, so you have all these different looks here. Here's the weekly on the euro. So Italy, this coronavirus is for real. And I actually read an article by some scientists that it's going to be very difficult to make a vaccine with the coronavirus. Isn't easy to make a vaccine. So, this is going to be something we're going to be talking about longer than we talked about Brexit, or the same amount of time anyway. So, with that being said, Blake, how are you today? And I know you're enjoying this action that we're getting in the market.
Yeah, and I am. And good morning, Dale.
Good
Actually,
morning, buddy.
the what I think is happening today is we are
Yeah.
seeing a consolidation of all this volatility, and it's probably going to be pretty choppy. I'm thinking probably into the end of the week until we get non-farm payroll. Remember, today we
Yeah,
have
tomorrow. Yeah.
what's that?
Oh yeah, I keep thinking Friday's tomorrow. No, today's only Wednesday.
I wish it was Friday. Holy cow!
Yeah.
But we do have ADP coming up here in just a few minutes, which we'll have to take a look at. But this is the S&P. I just want to show you
Yeah.
guys what we're dealing with. This is what I feel. You can see I've got it trapped by two trend lines
Like
because
that.
I think we're actually range bound right now. One of the things that we do have to be a little careful of today is the ADP numbers, because one thing that's kept the US economy strong is our just very consistent job numbers, strength in our jobs market. It's not like we're, you can argue the quality of jobs may be for crap. Oh crap! Speaking of crap, euro's getting a little bit of a boost here. It's a little risk off move. I'll talk about the euro here in a second. Um, the jobs market here in the U.S. has been really strong, very stable. Like I said, you can argue the quality of jobs. You can say, well, it's just crappy jobs, but it doesn't matter. People are working, and that's one of the things that's kept the U.S. economy afloat. So we'll be watching that. Geez, what the hell is happening with the S and P's here? Um, Switzerland numbers jumping. I think some of these fears in the coronavirus is, you got Italian schools that are all closing right now, Italian universities and schools, and that's going to come to the United States probably realistically. I here in Maricopa County, I live in Arizona, in Scottsdale, Arizona, and we got our first coronavirus case. You knock that number up to about 5, and I'm pretty sure that our schools will end up closing too. So it's not like people won't work. People will be working from home, but productivity will end up slowing down if that's you know and I use Arizona as more of a exaggerated case because we get a couple droplets of rain here, and then people drive 48 miles per hour below the speed limit because they don't know how to do it. So Arizona kind of an extreme case, and it really doesn't even matter because we have a lot of companies here. But you take the companies like out of San Francisco or Los Angeles, and you start closing those schools and universities, then it prevents half of your workers from going to work. because you got, a lot of parents are home with their kids and they can't go into work, so they have, so it will slow down productivity. Those are the things that we've got to kind of keep in mind moving forward, because we're already starting to see it in, like I said, the world. This isn't. I still view that the coronavirus is not a long term issue, but it is a, first couple of quarters. How's it going to impact global growth? How's it going to impact GDP here? How's it going to impact job creation? I think it could tip us into a recession. It's, we've been on a very long period of expansion, and this is a very, very good excuse for us to probably, have some sort of recessionary type of um, uh, action in the economy. Real estate transactions are probably going to slow down. A lot of business transactions are going to slow down. My wife, she has a gifting company. All of her suppliers have basically stopped supplying. So, and on top of that, people aren't buying because now she has the ones that have product are calling her, saying, "Hey, do you want to buy this or buy that?" And she's like, um, "My sales have slowed." So, no. So there's a lot of implications, but that's neither here nor there. What we're dealing with right now is the S&P. You can see it's really, I feel, consolidating. So above 3,100 is bullish, below 3020 is bearish. The markets are up overnight because now people don't understand, especially if you're in Europe, why stocks are higher with Joe Biden, um, you know, commanding last night in Democratic primaries. I'm going to make it real simple. Bernie Sanders has a following very similar to one of Donald Trump's. He's got a rabid following of people. He is the only person that would be a threat to Donald Trump's presidency. The market knows that Joe Biden has no shot. He doesn't, and I actually believe that too. And I'm not a Biden or Bernie fan. I'm just telling you guys how it is. That's why stocks were higher overnight, because they're like, well, Biden's going to be the nominee, so he's not going to be able to beat Trump. He's, uh, pretty delusional. Have you guys heard him speak? I mean, it's like fingernails on a cross, on a chalkboard. Anyway, um, actually, they both are. But anyway, I have to say that the one reason why stocks were rallying overnight is because of that. Now, um, can Biden beat Trump? Maybe, we'll see. I doubt it, honestly. But anyway, those are things that we're going to be paying attention to moving forward. But stocks are now a little lower as the coronavirus is kind of setting in, and you got North American traders stepping in, selling into this rally that we saw yesterday when the Fed delivered the big um, you know rate cut. Stock still fell, so that's something to keep in mind. Now, let me pull up the euro really quick before we go into the dollar index and we go into the data here in a second. The euro is trapped. It is trapped by the 200-day moving average right here, and the breakout point, and this big channel resistance. I'm going to tell you guys, while we're above 111 and below 112, there's nothing to do. Below 111 is bearish. Above 112, especially if we get close. I know we traveled up there yesterday, but we need like close above 112, then it's bullish. We are trapped in this area, and so you just be really, really careful as we head into the data. And I think this is a consolidation area that's going to yield us breakout, breakout, or breakdown. So and when you've got risk off, meaning if stocks, let's just entertain me really quick. Oh crap, hold on. ADP data in just a few seconds. Let's go to the dollar index. Let me pull up my Bloomberg. Let's just pay attention. ADP is looking for 170. You'll see it here. You guys also have your 183. Okay, so not bad, not bad. Still hanging in there. ADP is not as bad as it could have been. So, all right, it's not going to really move the market at all. I think maybe people might have thought it was going to be worse, and so it might get a little bit of a dollar bounce, but I don't know. I'm not. I don't think it's going to move the needle too much. We do have. Let's go over to quick data flash. And what you'll see today is we just had we just had the ADP numbers, and so that's. Hold on, really quick. Check something.
We have ISM.
Well, we have the Bank of Canada a little bit later too. Sorry, yeah. and ISM. ISM, and we do have the Bank of Canada today, which is going to be a big deal. Good morning there, Stelios.
Good morning, bro. How are you doing?
How's it going? Good. So let's talk a little bit about the dollar Canadian. So we do have the Bank of Canada, and look, I'm going to tell you guys right now, I don't know how to trade this data. The Bank of Canada, if you look at, hold on, let me pull up Bloomberg really quick. This is the Bank of Canada rate decision, and today, well, now it's changed to 0.395. So the market's split between, you know, I mean, we're obviously looking at, there's 158% chance that we get a cut. So the question will be, do we get a quarter or do we get a half point cut? And the way the market has responded, we saw the Aussie rally as the RBA only delivered a quarter basis point cut. We saw the dollar yesterday sell off after delivering, you know, a half a basis point cut. So, I mean, I think what we have to do with the Canadian is just respect technicals and kind of wait for it to, you know, wait for the data to be released. Let me point out specifics.
Your voice is a little laggy today, Blake. Do you know that? Yeah,
no,
breaking up and stuff. So
more than a little, unfortunately.
Okay, well, I don't, you know.
Really? Oh,
I wanted to be gentle about it.
But no, that's fine. As long, hey, if I'm breaking up a little bit, I'm breaking up a little.
Now you're clear as a bell.
That's because I'm not moving my mouse.
Okay, that may be it. Then.
That might be it. So this is really key support. 133.30. That's going to be really critical support for the dollar Canadian. Keep in mind that we do still have a pennant formation that still is not complete, and it completes at the 135 level. Now, most of you guys know this because I've talked a lot about it. I'm still very bullish at dollar Canadian, but that doesn't mean that I'm bullish right at this moment, because you have to see what the BOC does. But the fact that we had a false breakdown has led us to a breakout. Most of you know this already that listen here every day, because I've been playing the dollar Canadian on the long side a lot for the last week and a half, for a couple of different reasons. Knowing that it was a false breakdown in December, but more importantly, I've been playing this because I do feel that the false breakdown leads to a bigger breakout, and we're dealing with risk aversion. So risk aversion tends to be Canadian currency weak. So I've been playing the Canadian on the short side, playing the dollar Canadian on the long side. The bigger trade that I've been taking is the euro Canadian, really. But that was a week and a half ago. So right now I'm just kind of more focused on the dollar Canadian. But I think while we're above 133.30, this is going to be really key support. You could even say we could dip down to 133. Even if we dip down to 133, you're probably going to find buyers, because we did dip down to 133.20 and still, was bid up. So I would be very skeptical about being on the short side while above 133. Now, a break above 134 right here would be very bullish. And like I said, this is more dependent on the Bank of Canada, not so much, you can have your opinions, but when it comes to central banks, it's really going to be more of, what the central bank does is going to determine what this pair does. So I think above 134 is bullish, below 133 is bearish. You could buy dips to 133 and change, or you can sell rallies to 134, but a break of one of those two levels is going to probably drive its market. And that's what I'll be paying attention to. Okay. Going into today's Bank of Canada meeting. Matter of fact, I heard Steve and Stelios here a little bit ago. And I guess I want to ask you guys, what do you think here with the Bank of Canada? Because I'm not sure how the market's going to respond. Let's say that the Bank of Canada delivers a Fed type of cut and they cut a half a basis point. What's the Canadian currency going to do? Is it going to strengthen because it's going to be better for the Canadian economy, or is it going to be weaker and the dollar Canadian or the Canadian dollar gets steamrolled? What do you guys think there? Because it's a viable question, which I don't think I have an answer that I'm confident with.
Well, personally, I think so. What are we pricing for Canada today? Do you remember? You mentioned
We're pricing 40 basis points.
40.
Stelio.
Okay.
Yeah,
Yes.
so it's a toss up between a quarter basis point or a half basis.
Yeah, I mean, I think it's a good question. Versus the dollar, I personally think that the dollar is gonna weaken, and I've said this for a while now. I think it's gonna, yesterday's cut was the beginning, and I think it's gonna keep weakening going forward. So versus the dollar, I think the CAD will struggle to get any higher. Dollar CAD will struggle to get much higher. Where's that high? Is it 134.6? Is 134.6? Yeah. I don't know if they do 50. It's a good question.
Yeah, and that I don't know. And what do you think, Steve?
Everybody knows that I'm very bearish long-term the dollar, but I've said multiple times that if there is one pair that I'm bullish the dollar against, that's the Canadian. And as long as we are above the breakout area at 133, I can't really turn bearish. So
I'm with you with the dollar, but I think you have to be specific on what you're trading the dollar against. I don't think this is your vanilla long dollar, short dollar market. I believe that
I agree with you. Not yet.
I believe that the commodity currencies are going to be very weak. I just, here's the one thing that I do have to point out. The Aussie dollar has been really strong, and we've had a really nice bounce. Matter of fact, if you guys are, harmonic guys, you got to be looking at this intraday, right? This is this right here. The Aussie should fail from just intraday. We should roll over. Right. But I just read a pretty extensive report on the Aussie from a bank that they're, very, very cautious about being bearish down here. But I think it really, is more determined on global prospect if they continue to stay weak. The virus, no pun intended, lingers longer than expected, then I think the Aussie is going to continue to stay heavy, and same with the Canadian and also the Kiwi. But we have seen a really big, overall beat down of these commodity currencies, which they are a little, in my opinion, oversold, and they were oversold. We hit the big 161% extension, and we're bouncing, but also we're facing some pretty key resistance. Because if you look at longer term, this 38% retracement for the Aussie comes in at 66.60. So I think while we're below 66.60, you gotta think, yeah, this has been a nice bounce, but it might be a bounce that you sell into. So there's a situation where you're playing the dollar on the long side, but I wouldn't necessarily do that against the euro. So the better play is probably long euro Aussie, which is or you play the dollar short against the European currencies and the dollar long against commodity currencies. It's however you decide you want to play it, I think there's different ways to play that specific trade. So anyway, just give you guys some food for thought as we go into today. Hey, let me mention, if you guys and gals have not used Forex Analytics, make sure you do so. Try it out. It's only $1 for 10 days. Try it out. Download the mobile app. If you're using and testing Forex Analytics in the platform, you also will have access to our chat room, and that's where I'm at all day. So right here, you go to the chat room, and if you want to chat with me, that's where I'm at, probably 10, 12 hours a day at least. So with that being said, I'm going to pass it over to my colleague, Steven Stelios. And guys, it's all yours.
Thank you,
Thank you,
Blake.
Blake.
Thanks,
Thank you.
guys. Hey, have a great one, Dale, and have a good one, Dale. Thank you for being
You
here, and
too,
have a great
buddy.
interview, Dale.
Thank you, man.
All right, man. See you guys.
All right.
Steve,
Bye-bye,
Good
mate.
hunting.
So we
Steve-
have go on. Sorry, Dale, you're going to say.
Oh yeah, I just want to say that was a great direction that you gave people yesterday, Steve, about that any Fed cut would be a shorting opportunity. That was one of the best turnaround Tuesday.
Yeah, I think we would have turned directly down. The markets are getting some relief rally today because the chances of a Bernie Sanders presidency definitely got somewhat cut down yesterday with Biden almost
like
dominate.
100 handle, almost 100 handle.
Yeah,
decline from there.
Biden almost dominated. If actually he had won California as well, I think that would have been more or less, a done deal. Now,
I might be misinterpreting what Blake thinks, but what I heard was that Biden had a better chance of beating Trump, and that's why Trump is telling supporters on during primaries that are open for everyone to vote to support Bernie, because his preference was to run against Bernie.
I think
I'm
that
not
would
sure
be.
which one.
I think that would be quite a mistake, likely, because we've seen politics getting by the month more polarizing, and in that sense, I believe that as Trump was the preference of every Democratic candidate in 2016, believing that they can easily win against him, which definitely proved not to be the case. I mean, Hillary Clinton was the the stronger candidate.
So you think Bernie has a better shot?
I think that with people getting more frustrated, Bernie might have a better shot if the economy is going down to a recession, because we still have several months until the election, and during those several months, if we've now seen the high, and if this coronavirus disruption was the last push that an economy that was showing clear signs of slowing down since almost 1.5 years ago goes into a recession, I think that during a period of recession, Bernie Sanders will probably have a better chance of winning by saying, look at what capitalism did, etc. Of course, none of that is the fault of capitalism, because unfortunately capitalism isn't there. But look at what capitalism did. You have to give a chance to socialism, and socialism, is going to work for us, etc., etc. A lot of young people that don't understand, how an economy works, and most importantly, unfortunately, not having much of a historical knowledge, will go for it. So I do think that if we're going into a recession, which I now consider a rather high probability, Bernie Sanders might actually be a better candidate against Trump. Now, Joe Biden, I'm afraid, I mean, by having watched him a few times, I'm afraid he's not going to be able to hold against Trump in debates, because it's clearly he's clearly not the man he used to be. I mean, I don't think he's 100%, and I'm not sure he can go through this process without, getting exposed too much. So, if people could vote without having any of the candidates go in debates or talk to them, he might be a good candidate, but I'm afraid that Trump will actually expose him for, not being 100% fit to be a president.
Yeah,
Okay.
I think Trump is almost a done deal now. Again,
Really?
so I mean, I don't know.
Yeah. Yeah.
That's my impression.
Could be.
Yeah. So yeah,
Still, clearly, if the economy and the stock market tank, Trump doesn't have a solid chance against anybody. Because, I kept saying that since the first year of the Trump presidency. I thought that actually the economy would go down sooner than that, but they managed to postpone the inevitable by, first of all, giving it an artificial boost by increasing deficit spending, public spending, and decreasing taxation. So that gave a lifeline to the economy that lasted it like 1.5 years. Then we got monetary policy getting loose again, which again, was enough to somewhat support it for several months. I said since the beginning that Trump is doing a huge mistake so late in this business cycle to tie his success or failure as a presidency to the fate of the stock market, because you live by the sword, you die by the sword. So
for him, it'd be great to get this 20% correction or whatever it's going to be over with by April or May and have the market recovering into the fall.
Every time somebody has talked about a 20% recession, and I will insist
You
that
mean correction,
although
not
yeah,
recession.
correction, yeah. And I will insist that although I, from a fundamental thesis, we are in the same school of economics with David, and I agree, 100% with his viewpoint of the economy and his assessment. I'm not so convinced as he is that they will manage to reinflate the bubble. They might not. In my opinion, it's at best a 50-50.
Well, they started yesterday.
Yeah,
but
does it seem successful to you so far?
Well, no, because everything monetary policy has a 6-month lag or so. So they've been.
They don't have 6 months though. You understand what I mean, Dale, right?
Yeah.
And if you remember what I said many times ago when we were talking about the possibility of a correction, right? Or more than a 20% move lower anyhow. I kept saying that this market is mostly now supported by artificial asset price inflation. And I think that once that bubble gets pricked, there is no return so late in the business cycle. So my assessment is that once we see the indices tumble more than 20% lower, I don't give them a good chance of managing to reinflate this bubble before it completely deflates. So for me, I totally get where you're coming from, that, okay, if they can get a 20% correction now and then have several months ahead to start reinflating it, then that might not hurt Trump's chances of getting reelected. That's your point, right? But, my counter argument to that is 11 years into this business cycle with so many actual problems and at an economy that is extremely weak, there might not be a way to actually get out of a correction, no matter how much they try. Keep in mind that after yesterday's rate cut, the Fed is just now 1% above zero. So having to do with interest rates, they don't have any more room to the downside. I mean, they do, but it's not the kind of room that would make a big difference to the economy. Having to do with quantitative easing, they're already doing the most aggressive version of quantitative easing they've ever done. Yesterday alone, they offered 100 billions overnight of repo, and that was actually oversubscribed by something like another 10 billion, 10 billion or whatever. Now, of course, they can increase it even further, but what I'm saying is, I think we've definitely reached the point of diminishing returns. So I'm very, very, very skeptical that they can actually do something to turn this train around. That's my point of view. So I would be very, very skeptical with that possibility. Now, okay, Stelio, what
Yeah.
else did we have before we go to the church?
Actually, talking about Biden and Trump, we're talking about that Biden might have trouble on debates and stuff, but you've heard Trump speak as well, right? Or tweet. It's like, the two of them. I mean, is this the best two politicians there are?
The problem, Stelio, is
anyway,
that a lot of people are seeing Trump as a special case. You know what I mean? But I don't think there are people that consider him senile. Is that the right word?
Yeah. Anyway, it is what it is, But,
yeah. Now you know that I don't like Trump, and I do consider him, in many aspects. Yes, when he's talking, he's like, many times I feel like I'm hearing like a 10-year-old child speak, but that hasn't actually changed. I mean, they voted him being that, and he's not showing any signs that he's losing it. So they liked him as he is. Now I have no idea why, but that's how it was. So that's not a new factor that you have to price in his probabilities, right?
Yeah. Okay. So otherwise, I mean, the main news again is the coronavirus, and our friend here is saying the coronavirus is yesterday's news. It's nearly dead. I disagree with that.
Sorry, let me completely disagree with that as well.
I think that the effects from that will be felt for months and months. I'm just reading a headline here. Flybe, the airline, UK airline, are saying they're running out of cash. They need support from the government or whatever. It's
I've seen so many pictures of flights that are like empty, like there are 5 people on board.
Airlines have been hit massively, but I think the effects of all this are going to be felt for months and months. And you saw the announcement that Italian schools and universities are going to be closed. All sorts of events are cancelled.
There is FX Trader. He's linking Lufthansa Group to ground 150 aircraft due to coronavirus.
There you go. It's just people are not going out. They're not doing business. They're very protective of themselves, right? And it makes sense. And if the Fed cut another 100 basis points, are they going to go out and start doing stuff? No,
nope.
They're not. So
they couldn't care less about rate cuts are not going to make you feel safer. And that the problem at the moment, the problem is supply has been massively disrupted and demand has massively decreased, but the reason that demand has gone down has nothing to do with the affordability of money. Nothing to do with it.
Yeah, exactly. And this is still dominating news. And cruise lines offer already 30% discounts.
Trust me, they're going to have to offer even more.
If it's not 90%, I don't think anybody's interested. So my opinion is we're still going to be talking about this for a while, and the effects. Okay, maybe when we go into the summer, the virus itself is going to be contained, but the effects are going to keep going. So I think the stock market, any rally should be sold.
I read it's going to be around for 3 years. I posted
also something else to consider, and I've said that multiple times. Unfortunately, the global economy is extremely sick. Mostly the US economy, and I know that if you are reading the media, you would think that's the exact opposite, but numbers don't lie. If we wanted to be honest with our calculations of growth, the vast majority of economies would be in a recession since 10 plus years ago, because what kind of a growth do you have when to produce X amount of GDP growth, so increase in
like in China as well.
Yeah, you need multiple times that in debt. That's not growth. I mean, if we wanted to be honest with accounting, with countries accounting, first of all, we would apply the same rules that we do apply to companies. So, for example, unfunded liabilities should be counted at that year's GDP. So when during a year you make promises of paying in the future 5 trillion in whatever, pensions, Medicaid, Medicare, whatever the hell else, you should count that in that year's GDP. Countries don't do that. bottom line, the US, for example, for the decade that we just started, has $120 trillion of unfunded liabilities. Add to that the fact that the US is running something close to a 9% deficit. If you count what, you would go to jail if you didn't count what they call off-budget items. So if you add the on-budget and the off-budget items, so if you just calculate the amount of debt that they need to raise every year just to fund the budget, that's 8 to 9% deficit before actually officially get some type of an event like a coronavirus. When the underlying economy is extremely sick, the economy cannot actually get past that. Now, if the economy was actually healthy, yes, some event like coronavirus would definitely do some short-term harm to the economy, but the economy would get over it. But, when the patient is extremely sick and you give him a flu, the flu might kill him. So that's the exact example. It's like you have a cancer patient at a very, very bad condition, and then he gets the flu. Would the flu kill a healthy patient? No. But, can it kill a cancer patient that's like, in the borderline between life and death? Yes, it can. So that's, the exact analogy here.
I like this version, Dr. Steve talking.
Yeah,
like that.
Steve, what do you think? And still, I know you're looking for a top in the European bond market. So we really had a waterfall, exaggerated move in the 10-year. We got down to 90, and I thought 110 was ambitious. And we have some bottoming action in U.S. dollar yen. What do you guys think? Could we be near the end of this? I heard some guy talking about 25%, a quarter point 10-year yield coming, but I look at this, and to me it looks like that may have been exhaustion in the 10-year. Where are you guys at on bonds and US dollar yen?
I personally think bonds have very little leeway now. I mean,
I think the same even more applies to treasuries.
But treasuries, man, I'm not sure. I'm really not sure. 30-year bonds are negative. So why couldn't they go to zero?
I'll tell you why. How can you compare the health of the US economy to the German economy?
I can't. I'm just saying in the short term. If they cut
that's a big difference.
Zero,
that's a big difference, though.
Yeah, but this is 100 basis points.
First of all, both of them are trading at irrational levels. There's no question about it. I mean, future generations are going to be looking at this period with yields being what they are, with the fundamentals of economies being what they are, and they're going to be like, oh my God. I mean, how couldn't they see that was like the biggest bubble ever?
Biggest mispricing of risk.
Yeah, biggest mispricing of risk in the history of mankind, right?
Yeah.
Certainly, books like 20 years later are going to be talking about it. Now, the next question comes, okay, can you really time the top or the bottom in yields if we want to talk about yields? It's very tough. But I will agree with you that if you're looking at the longer term picture, taking the other side, now makes sense. It makes sense. You might find yourself being out of the money for a period, but I don't think that's going to be, such a long period.
I'll ask you something else. Would you sell 10-year treasuries at 1% or 10-year Greece at 1%? I think that's an easy question, easy answer, right?
Yeah.
So that's why I if I was to short something, I wouldn't sell treasuries yet. I think they're going to a place where they're going to be sold massively, but I just don't think yet. I could be wrong. I've been wrong many times.
Okay. Well, Estelle, that's a good point. And maybe we really don't have a big bear market in bonds until we have a big bear market in the dollar.
Yeah, could be.
Could that be it? Yeah. I mean,
Speaking
the currency, underlying currency.
That's the first chart I wanted to talk about today. Look where
is that impulsive, Steve, would you say?
Found
for
support.
The first time? That's pretty impulsive.
As I've told you before, we've seen quite a nice move lower, but look at this channel.
In a hurry.
I want to see this channel break down, and I want to see a lower low, so below 96.36. And so far, what we saw was that the dollar reversed exactly from this channel resistance, and found support exactly at this channel support.
with the stock market.
Yeah,
Or
so
it was even weaker than the stock market because until today it didn't rebound, where risk came back a few days ago.
indeed, you're right. But the dollar didn't respond,
Yeah.
and even today, so far, what we have is an inside day, right?
That's what
So
I mean.
not
It's really weak.
nothing to really write home about. I do give it a little bit more credibility, though, combining it with the fact that we did find support at the channel. So, seeing an inside candlestick when we just found support at an important channel, the risk reward in the short term would be tilted for a little bit more of a rebound, at least in the dollar. That would also bode well, since now we see a direct relationship between a positive correlation between what risk is doing and what the dollar is doing. Let's go down actually to a 4-hour chart. I think it's going to show even better. So if we could get something like this, right? It is likely that we might see another leg higher and then lower. In any case, I've started building a short position in the S&P because I think it's quite tough to assess if we're going to manage to probe new highs towards the 61.8, so closer, let's say, to 3,200, or we're going to fail sooner than that. My conviction remains very, very high that in any case, this market should be sold. As with, any stock market, I think we're going lower, as simple as that. So Biden becoming the likely candidate, or anyhow increasing a lot the probabilities of becoming a likely candidate and reducing the probabilities of Bernie Sanders being the next president substantially, is positive for the markets. Fed trying to do whatever it could is positive for the markets, but even the combination of the two, I don't think there will be enough for this market to actually turn higher and go to new highs. So I'm still looking lower, as simple as that. And as I said, there is a decent chance that this market, this bubble, has found its break. And after that, what starts mattering is valuations and people running for safety. And as simple as that. If you look at the DAX, it's a similar situation here. I do think that this move lower was impulsive since we broke through this ascending wedge. So I'm looking lower. The FTSE has broken through a diamond, a large diamond formation, might rebound a little bit further, even closer towards 7,100. But I do think it's also going to turn lower. In general, I'm very bearish risk at the moment, and I feel fine building short positions. Now there was a question if I'm still short palladium, and the answer is absolutely yes. I'm still short palladium. I actually increased even further my position yesterday a little bit. I now have 1/3 of a full position. The reason I'm not jumping into a full position is because it's extremely volatile. So having a full position here would mean either very big profits or big losses. So I had to adapt my position size based on extreme volatility, because I remind you that palladium just last week, it had at some point a day that had a 13% range. So 13% move is insane. It's something that you would expect to see only from a stock during earnings day, and definitely not from a precious metal, right? My cost average has now dropped a little bit because I added once we broke through 2,500. So my cost average now is almost exactly at 2,600. So I'm decently in the money. I mean, we're at 2,460. I'm like $140 in the money, and I'm not going to have a problem increasing it even further to um, um, to a half a position. I don't think I'm going to easily go above half a position here. But if we're headed where I think we're headed, even with half a position, I think I can make a killing here. So yes, I do still have my position. And by the way, I forgot to thank yesterday. I think it was Stavros that brought my attention to the fact that natural gas had actually reached a long-term target I had in mind. So, I bought half a position and that has moved very, very nicely. I entered at 1.7 and we're currently like, what is it, like 6% higher or whatever. It's just half a position, but, quite a nice move. And I'm willing to add to it if we manage actually to break above this descending channel. Now, in the same manner, we've seen crude rebounding. Crude actually posted a very nice key reversal on the daily chart. It was Monday. And, it might rebound even further from here. Although as long as we remain below the previous low at 49.30, I would still remain very cautious. So we did have a nice RSI divergence. We did have a nice key reversal on the daily chart. But, since I'm expecting more risk off in the days that follow, I wouldn't be very optimistic about the fate of crude because I think it's highly unlikely that indices are going to start tanking lower and crude is going to be rebounding. It's not impossible, but it's a low probability scenario. And of course, I'm not blind to it. The same applies to natural gas. That's why I still have just half of a position and I remain very cautious as long as we're capped by this descending channel. So, I'm not going to be, shooting for the sky here because as far as I'm concerned, we're still in a bear market until proven otherwise. So I'm going to protect, uh, my profits. I'm going to be trailing my stop loss, perhaps even later today. I think I might move it to 175, which was that low, to to lock in some of my profits here. Steve, no bubble anymore, just a little overvalued and will continue to be. Gautam, sorry to say, mate, I completely disagree with your point of view. This is all good news. That is how we kill the virus. We have to look past near-term disruption. Stock investing is long-term, so long as we control negative economic impact and avoid a recession. How can you control negative economic impact in an economy that is in a very bad position? Fiscally, it's as close to blowing up as possible. Let me be very clear. If the dollar was not the world reserve currency, with the current fiscal position of the US economy would have already blown up to kingdom come, as simple as that. Also, people had similar opinions with yours having to do with the health and the longevity of Japan, and people that were buying the Nikkei in 1999 and in 1990 when it initially started moving lower, there's been 30 years since, and they're still like 30-40% out of the money. So I have no idea what makes you think that the same fate cannot find the US. So personally, I do think that in the long term, stock investing, yeah, it's it's something profitable. But you also need to keep in mind the big picture. And the big picture tells me that the long-term fate of the US economy is at the best case scenario in doubt. And what worries me even more is that at least, for pretense, uh, for example, Republicans used to play, because they never, they never produced, but they used to play the fiscally responsible party. And now not even Republicans care about deficits, debt, or whatever. Not that they ever actually did something about it. So let me be very clear. Unfortunately, both the US parties, both the Democrats and the Republicans, they kept increasing public spending every time they were in power. And not really compensate with any real measures. So for example, it's not that they actually increase taxes, not that I'm for increasing taxes, because increasing taxes has not a positive effect. So the only way to go about it is decrease regulation, decrease public spending, so you can keep taxes, to a minimum, and that is how the US became a superpower. And the opposite reason is why the US is in big danger of, becoming a pariah, slowly but surely. I will be ready in 2 minutes. So your guest is here. He says he will be ready in 2
Yes.
minutes. Anyhow, we start
Yes.
in 5. I would agree with you, Jim. Republicans pretend to care about debt only when Democrats are in office. I agree with you. Yeah, it's hypocritical, but at least they were pretending. Now they don't even pretend. You know what I mean? So now it's like both parties have accepted that the way forward is just continuing to be fiscally responsible. Schools closing, starting Chicago and New York, both have some schools being closed. Washington State considering 2. So this is not close to over. I 100% agree with you. I think we haven't seen the height of this coronavirus panic or crisis. I think that in the month ahead, we're going to have much more to panic about. I'm not advocating that people should panic, by the way. I do think that you should be extremely careful if you belong to the percentage of the population that is, sensitive, like you have some pre-existing health conditions or very old age or whatever.
Should I
Other than
stop going to karaoke? Because once in a while, my mouth will hit the mic, and
I think if you stop going to karaoke, you're
Uh-huh.
gonna die without the need of coronavirus. So you should keep doing that.
Yeah, my soul will die.
Yes, exactly.
And
if
the
your soul
kitty
dies-
agrees too. So
Yes.
okay, all right.
Yes, and Daliki does agree indeed. Now, another important development from a technical perspective, not coincidentally, the exact opposite development we had in the DXY, is the fact that Euro USD did make an attempt intraday to break above this channel, but actually so far it's failing. So I do foresee what we said in advance, that initially this channel might reject price action. So far it seems to be doing so. So a pullback towards 110.60 or even a little bit lower towards 110 might get people interested in buying the pair again. And if that happens, I think that next time we're moving higher, probably the channel is not going to be enough to reject price action, and we might see a breakout in the Euro USD and the breakdown in the DXY. So that covers that as well. Cable was weak today, reversed higher later on. Pay close attention to this. We are back testing this broken triangle. You can see it here. So we're back testing this broken triangle's trend line support as the resistance. And if you look at the 4-hour chart in the cable, let me pull it up. Here it is. And if you look at the 4-hour chart, you will notice that on the 4-hour chart, we can also see here a symmetrical triangle. We're coiling within the symmetrical triangle. So in any case, 128.50, let's say, quite important as resistance. So below 128.50, I would understand why somebody would want to be short the cable, but above 128.50, I think we can squeeze higher. So in my opinion, you don't want to be in the wrong side of the market if that happens. So that's what I'm monitoring here in cable. Let me go through some of your questions. Yesterday's, yeah, okay, we read that. The Lufthansa news. Sanders lacks black support. Yeah, that's what seems to be giving Biden, his strength. The fact that he really dominates in the among the African American voters. Yes, that is very true. So having to do with the USD CAD, since a lot of you are asking, I'm going to stand to what I said. Let me pull it up and show you. So here is the USD CAD big move lower after getting rejected from that confluence of resistances. But look at this. We found support by backtesting this formations, these big triangles, trendline resistance as support, also breakout area, multiple types of resistances now turn support here. So bottom line, as long as 133 holds on a daily closing basis, I have to remain bullish here for a move towards 135.60. Only breakdown from 133 is going to turn me bearish. Okay, as simple as that. And the risk reward definitely favors long positions here, because you can have, like, let's say, 0.5% of a stop loss looking to make like 1.4%. So it's like almost a 3-to-1 risk reward. I would have to call that healthy, right?
Yeah, held where it had to. Thank you, Steve.
Thank you, Coach. Gold, silver, palladium. I already covered palladium, but very briefly, and sorry for forgetting to do that. Now, if you remember, I kept saying again and again, gold might correct lower, but don't be short gold, because in such a market, gold can explode in your face. Now, yesterday was a good lesson of exactly what I meant. Yesterday, we had a $60 up day following the emergency cut from the Fed. And, I said yesterday that so far that retest of these broken triangles, trendline resistance, acting as support seems to be holding. No question about it. After exploding higher following the emergency cut, keep looking higher. As simple as that. And that is why you don't try to make a few pennies shorting a correction when you're in a bull market, because that might happen. As simple as that. Silver also had like a big day higher, but again, no question about it. Gold is still overperforming silver. And as I said again yesterday, if you want to be long one of the two until proven otherwise, you should be long gold. And I do think that gold might already be on its way to the next upside objective, which is the 78.6% fib of the all-time high, which passes, if I remember right, from 1733. And that concludes what I had to say. Thank you, Coach.
Okay, buddy. Tavi, I want to welcome you back to Face. Gonna get you set up now. Welcome back, Tavi.
Hi, Dale. How are you?
Oh, everyone's trying to find their bearings. We haven't seen this type of action last week. I believe, wasn't it the fastest 10% correction in market history?
Yeah, one of them.
Okay, so I don't remember from our last interview, Tavi, but do you want to share your screen, or do you want me to show the different
I
instruments
personally
that we're
don't have
covering?
anything to share here unless.
Okay, then I will.
Okay.
Okay, so I'm going to share our screen. Why don't we start with the S&Ps, Tavi? So just to let people know, you're a hedge fund manager, and here's your company, Crescat Capital, and you mainly work with accredited investors, right?
That's right.
All right, what's a new requirement for accredited? Is it $250,000 outside of your house, or
It's actually $1 million. Yeah.
it's $1 million now?
Yeah.
Oh, okay, so you have all different types of funds. Why don't I start with this? Was your long short fund the most? Which one of your funds had the best week last week?
Global Macro Fund was up significantly last week, and that's because we're being able to implement what we call the macro trade of the century, which is being long gold in renminbi terms, and long gold in dollars, and long gold in Hong Kong dollars as well, relative to being short stocks. And that's, obviously that was we got hurt on precious metals, but I think the gains from the shorts, offsetted that pain. And I think this week has been it's been going a little bit better, at least yesterday. Today, probably going to be a pullback, given how the market is reacting from the Super Tuesday.
Okay, so this definitely changed the character of the market that has been ongoing for quite some time. Although we've had these interruptions before, maybe back to the end of 2018 when all the former Fed chairmen got together with Powell and they all held hands, remember, Tavi, and they sang Kumbaya, and Powell reversed course, and we had a short squeeze all last year. Do you think this is just a pause that refreshes, or is it perhaps the beginning of a bear market? And I only say that because of this formation, which is a megaphone formation, Tavi, that we took out. We had an overthrow. Now we're trading back inside of this megaphone formation. And if it's valid, if you look at the bottom of my line, it's possible for us to see a 2000 SPX. Am I, way off base here, and this is the buying opportunity of the century, or should I be raising cash on strength and looking for more shorting opportunities? What do you think?
Yeah, that's a good question. I'm on the camp that I think this is the beginning of a bear market, and I've been in that camp for a bit, given how macro indicators have been deteriorating for some time now. From that perspective, I think that why the market hasn't really turned was because of the labor market and consumer confidence that held up pretty well in 2019.
Yeah.
Right? Even before the coronavirus situation, we saw equity earnings beginning to the growth begin to contract instead. We've had the yield curve inversions reaching the 73% level. We've had jobless claims, continuing jobless claims begin to rise on a year-over-year basis. All those are cracks in the labor markets, and the venture capital activity that began to slow down significantly. And I think that now with the coronavirus, that's just the tip of the iceberg, especially when it all started at the worst place at the worst time. I mean, there's never a good time and a good place for that to happen. But China truly is the place that it was holidays in China. It was the time of the year that the Chinese people spend most money, and obviously that wasn't the case. At the same time as we have perhaps the largest credit imbalance that we have in the world today, historically speaking. I think that China being responsible for over 60% of GDP growth since the global financial crisis, I believe strongly that that's going to have an impact. And now the outbreak is really global now. It became a pandemic, and especially in places like South Korea, which is a key economy for the globe, for the world. And every electronic piece is basically
they made my car.
Exactly.
Yeah.
You got Samsung, and so many other companies, and I think that's it's even worse than Italy. Obviously, we're talking about markets here, not about humans, but and which is awful. But I think it's getting worse, and I think the markets initially, I think that gold, especially in precious metals, the prior weeks were really being a precursor of this sell-off in equities, and then we had this sell-off in equities. Gold sort of got ahead of itself. Precious metals overall got ahead of itself in the short term with the CFTC positioning. You have RSIs getting an extreme, especially on silver. And I think that we're now resetting that position, and especially RSI, even in S&P 500 now, it's not as extreme as it was a few days ago. I think we're resetting again. If you ask me, what's my favorite investment? It still is buying gold, buying precious metals, and selling stocks. Is that ratio of gold to S&P 500? I still believe strongly that that's going to be ultimately what continues to rise here. If you look, I published this yesterday, looking at a chart of silver to Russell 3000, just a broad way look at stocks in general, and you can see we basically just formed almost a perfect double bottom, and it's been rising and making higher lows recently.
Look at that. What a producer I am.
Yeah.
I'm not only an interviewer. Look at this. Here's Tavi's chart right here. Okay. Yeah. Silvered equities. Okay. Because that's interesting, because I mainly look at the gold silver ratio. And this is the opposite of what we've been seeing. And so silvered equities, when's the last time we were here? In 2000? Wow. Okay.
Yeah.
How do you execute a trade like that?
Well, there are many ways. The way we find more attractive is on the long side is to look for. We're not just long silver, by the way. We're long silver, gold, platinum. We're long
Yeah.
a selective number of miners, which is an industry that's been historically depressed, and so it's more of a diversified way of being long precious metals, and hopefully hoping to find alpha here in this trade as we think this is going to play out well on the long side. On the short side, it's quite the same. We're looking for the most, rather than just shorting the S&P 500 or the Russell 3000, regardless what index you want to look at. We try to search for the most overvalued companies using our models and our process. And a lot of those are actually in the U.S. So the distortion of price to fundamentals are actually a little more extreme here in the U.S. In terms of banks overall, not really. The banks that we like to be short are banks in Canada, Australia, even China.
Commodity based, is that why? They're natural resource type economies. You would think that you would like those countries.
Well, I would, unless the problem is that number one, we try to be long oil, and I think the situation there is that coronavirus really changed the landscape for that.
Okay.
Number one, but in terms of commodities, of being long commodities and being short equities, we like first and foremost is precious metals, and Canada and Australia and Hong Kong have extreme ties with the Chinese economy, in which capital flows, outflows from China is exacerbating those markets, especially in the housing market of those places. And we believe strongly that has been reflected on the banks. And when you look at the banks, actually, the valuations and multiples look a lot like the banks here of 07 and 06.
Interesting.
So,
okay. So the U.S. has cleaned up. A lot of the U.S. banks have cleaned up their balance sheet that a lot of these other countries never addressed in the Great Recession.
Yeah, I'm not sure
2008, 9.
Yeah, I'm not sure if it was effect of they never addressed, but I think there's from economic cycles globally speaking, more globally now, there's always someone as a country that is at the center of the imbalances that we see. I think what is at the center this time in terms of credit is certainly China. It is the economic driver of the world. With the shrinking current account problem, is becoming more challenging for them to continue to provide growth for the world, and you can see that by little things like I'm
showing the 10-year real yield in China has dipped into negative territory. A chart you have on your website as well, and looks like it's headed towards where it was in the depths of the Great Financial Crisis, the Great Recession, all the way to the left. So if China's an engine of growth, why do they have negative real yields?
Yeah, well, because they can't grow and they have to continue to reduce rates. If you look at SHIBOR rates, which most of them, they're all manipulated, especially 10-year yields. Who buys 10-year yields in China, FYI? it's all.
Let me ask you this. Who's going to buy 10-year yields in the U.S.? Here's just a look at a weekly chart of 10-year yields. To me, this looks like we're headed into some type of exhaustion.
Yeah.
What are you telling your clients as far as owning U.S. sovereign debt? Are you avoiding it? Are you taking profits on it? What are you doing here?
We might reduce a little bit on one of our lags in that trade, but what we've been doing is actually we've been sort of betting on the convergence of rates between U.S. and global rates in general. So when you look at the world today, you have about 17 economies that have their 30-year yields. 30-year yields are lower than overnight rates in the U.S. We thought that was a tremendous opportunity. When you look throughout history, that actually happened. That inversion, what we call the global yield curve inversion, actually happened in 06, 07, also happened in 1999 and in 2000 prior to those downturns in the economy. And what we've been doing is being short, let's say, German bonds, for instance, and being long treasuries. So it's
interesting.
it's one way. Yeah. And you can see that if you like, and I know you do technicals,
Yeah.
go ahead and look at the German 5-year yield versus the US 5-year yield, or I should say the 5-year US 5-year yield versus German 5-year yield. And you can see that the spread between the two, when you look at the breakdowns on that ratio, it's incredible. It almost perfectly marks the beginning of a recession. So I think that's usually because the central banks elsewhere are usually late to the party. And in the U.S., money comes into the U.S., so you have a bid on the dollar, and it's sort of what we're seeing, I would say. But anyways,
do you automatically have a bearish view on the dollar because you have a constructive view on the gold, or could you be constructive the dollar and gold at the same time?
100%. If you think about mathematically, if you're long gold in dollars and you short renminbi, you're essentially long gold in renminbi terms. So it's not that we don't like gold versus dollar. We actually like that trade too. But we actually prefer also to add other trades, like being long gold in the most overvalued currencies in the world today. And if they're pegged, that's okay. That means we're essentially long gold versus the dollar. But we're also adding this asymmetry to the trade that could happen in case something depegs, especially Hong Kong dollar and China, which you look at currency crises in the past, they do have all the imbalances aligned and to have one. So, it's just it's a cheap way when you look implied volatility for those trades to put out a put option on CNH USD or HKD USD. It's very clear that it's not very expensive for you to get enough notional and delta notional exposure to your portfolio.
Okay, so we've seen the renminbi snap back here.
Yeah.
Do you think that this peak at 720 could have been it? Or do you think that, right here, that this could be a decent, buying opportunity in US dollar yuan, looking for more yuan weakness down the road? So here's your weekly trend. What are you thinking here with
I actually really like trades that are the least clear trades in the world right now. And I think one of them is USD being long USD CNH, because everyone is thinking the same. If the Fed is easing, and that should have an impact on the dollar, there's some sort of a constructive way of reducing the dollar power globally, and that should have an impact on USD CNH going lower. I love that contrarian view, and I think actually it's quite the opposite. I think USD CNH is in a pullback here, and I think it looks incredibly attractive as a trade to be long. There's a high probability that could unwind in a big way, and you don't have to be extremely big in that trade. I mean, the asymmetry is incredible. Not as good as Hong Kong dollar, I have to say, but I do believe though that this recent decline in the equity markets that we had, it's a complete change in regime in terms of volatility. And I think the investors are finally waking up to the risks that we're seeing in an overdue downturn in the business cycle. And I think the Fed is losing control of the situation slowly. We saw that clearly when they dropped interest rates and the market actually fell apart significantly. And the conventional view that the central banks can prevent recessions has been proven again to be a complete fallacy. And then I think that further easing is inevitable, especially from the PBOC side as well. And the scenario is just incredibly bullish for gold, regardless what currency you want. From gold and renminbi, gold and Brazilian real, and Canadian dollar, and Aussie dollar, you name it.
Can you think of one bearish fundamental for gold?
Sure, I do. I actually think that if the renminbi falls apart in a huge way, I think that could be deflationary. And also,
why would China sell some of their gold reserves to defend their currency?
I don't think so. I think that they would. I think a lot of their reserves is encumbered, to be honest. But that's my view on that. I think that I think the issue with that is just I mean, it's a manufacturing plant of the world. So anything
Right.
that is built there, and everything is, if you want to value significantly, I think that will have an impact in the world. But another one is the coronavirus, which is the jury is still out. Is it a deflationary and inflationary? If you looked at inelastic products like food, water, you have to buy regardless.
Right.
Those things are probably going to rise, and that's food inflation.
Right.
So CPI for food is going to be rising likely. And if that again, if that plays out as is playing out in South Korea, in Italy, we don't know yet what's going to be the case in the U.S. I have a feeling that the same way the market was ignoring coronavirus a week ago, and all of a sudden just started to price that in, I think we're also sort of ignoring the fact that there has been a lack of tests on patients in general, and we might have a lot more cases than we think we do. And I think that is also not priced in the markets. But you're right about the Bernie Sanders elections. That definitely takes a little bit of off the table in terms of risk. Biden is a more centric candidate, and that would be a little bit of a takeoff risk.
What do you, you sound very concerned about the coronavirus. You're here in the U.S., right, Tavi?
Yes, I am in Denver,
Okay,
Colorado.
right. What are you doing to prepare for it with your family?
Look, I'm not doing anything.
Did you go out and buy like a whole pallet full of toilet paper and bring it home?
No, I did buy more than I usually buy. My wife always had a stock of
Stockpile.
things like that. But
Yeah.
in terms of food, I did intentionally buy more than I usually buy. I eat a lot of rice, so might as well just buy rice for the next
Yeah.
year or so. I mean, it really cost me not much to do that.
Right.
And so I did a little bit of that. I've been just reading, about that doctors of how to not get infected in terms of washing your hands and taking vitamins and things like that. So I've been taking care of that. But yeah, I'm scared. I think it's a big deal. And I think, unfortunately, around my circle of friends, I'm not seeing this as a big deal. I think it's a big deal for market participants. A lot of people have been sort of watching that more. The people that are outside of the markets, they're not even talking about that. It's been sort of a joke, really. I mean, a lot of people have been joking about it when it really shouldn't be a joke.
Well, I don't know.
They're
They're emptying out stores here at Costco, and so I think there is a little bit of panic beginning to set in. And have you heard my poem about coronavirus?
No, I did not.
And you could put it on your website or write a rap song.
Okay.
Corona, fear that I'll own you. Born in a lab in China, spreading so I'll find you. No one is safe, not even a king, and I'll be the excuse for everything.
Wow.
Huh?
Did you just do that?
Yeah.
Wow.
You like it?
Yeah, I did.
Anyway, I don't know what I'm doing in the markets. I should be a Nobel poet laureate. But anyway, that really the key line in that is it will be the excuse for everything.
Yeah, I agree.
Don't you think?
I think it could be the thing that pops the entire bubble. I mean, there are so many reasons for why the bubble could be popping, and it hasn't yet. I mean, you look at numbers. I suggest everyone to look at things like numbers in South Korea, Japan, and even in the U.S. in terms of macro indicators. Prior to coronavirus, everything was turning lower, not higher. Look at the GDP number for the fourth quarter of Japan, and by that you can only imagine how much it would be the pain. Economically speaking, this is the worst time that could ever happen.
Yeah, and let me validate that from last time you're on, Tavi, and I don't know how many months ago it was, that your narratives that are working now were already working before the coronavirus hit the headlines. So maybe this is just a catalyst and some type of rocket booster for what was going to happen anyway. And again, this is just the excuse of what was going to happen anyway. What do you think?
I couldn't agree more. I mean, we build a lot of macro indicators and macro models to help us to identify where we are in the cycle. And I believe strongly we're at the very peak of the cycle. it's exactly why we like things like precious metals right now. And I think that it's an interesting setup when you have precious metals being so historically undervalued, when you find stocks being so historically overvalued. It's what I call the battle of extremes, and really is. And I think that the unwinding of that has just started. So
Okay, well, Tavi, there you are. There's Tavi right on my screen. Happy, great smile. You know, smiles everything. And you're my trading warrior brother, Tavi, and I, wish you a lot of success and that your family is safe and healthy, and that you guys can help people prosper during what may turn out to be a very serious crisis in terms of financial markets. So thank you for being with us again today, Tavi.
oh, thank you, Coach. Same to you, and I hope you stay safe as well, obviously. And it's always a pleasure to talk to you. Thank you for having me and for an invitation. I enjoy talking to you.
All right. Well, thank you for edifying us and some very interesting charts that you showed, that silver ratio to stocks. And I didn't know that China was in negative yield territory. So I learned from you today, Tavi. Thank you, my trading warrior brother.
Thank you. Take care.
All right, everyone. So that's a wrap for us. We'll see everyone tomorrow. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. Hope everyone stays healthy and continues to trade and continues to be a warrior. Adios, everyone.
Bye.
Thank you, Tavi.
Thank you.